Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now I'm continuing the main problems on capital and revenue expenditure. In the last video, 7 main problems I have completed on capital and revenue expenditure. 8th problem onwards I'm going to start in this video. So before starting the video, I expect my viewers to first watch the theory of capital and expenditure. Until and unless you are sure about the meaning of capital and revenue expenditure, differences, treatment, how it will affect the income statement and statement of financial position, and what is the effect on income statement and statement of financial position if incorrectly we have take revenue and capital expenditure. All these things I have explained in the first video on theory. So without understanding the theory, you cannot be able to understand the problems. That's why if you want the complete perfection, watch the first video on capital and revenue expenditure. And of course, the short questions and MCQs are also very, very important. Now, before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So always before watching any video on problems, first take a printout and keep it ready. Take a screenshot of the solutions from 8th problem onwards. Then I'll explain each and every point. Come on, see the 8th problem. Evaluate the effect on a business financial statements of the incorrect treatment of capital expenditure and revenue expenditure. It is only a theoretical question where it is asking you what is the effect on the financial statements. The financial statements consist of income statement and statement of financial position. These two combined are called financial statements. So if an accountant commit a mistake in treating capital expenditure as revenue or revenue expenditure as capital expenditure, then what is the impact? What is the effect? That's what it is asking. Already in the previous problems also I have explained. So it will affect the income statement and also it will affect the statement of financial position. So first, what is the effect on income statement? If a business wrongly treats capital expenditure as revenue expenditure or revenue expenditure as capital expenditure, then definitely the profit calculated by income statement will be either overstated or it is understated. The first effect, wrong treatment of capital expenditure or to revenue or revenue to capital will understate the profit or overstate the profit in income statement. Second effect is it will affect the non-current assets section of the statement of financial position. The statement of financial position will have a section called non-current assets. The non-current assets may be overvalued or it may be undervalued if we wrongly treat capital expenditure as revenue or revenue as capital. For example, here I'll give one example. Suppose a business has purchased a motor vehicle, but by mistake this motor vehicle was charged as motor vehicle expenses. Actually, when motor vehicle is purchased, it's a capital expenditure. That motor vehicle should go to non-current asset section. But by mistake, the motor vehicle has been charged to income statement as an expense. Then what will happen? The profit will be understated. Profit will come down because motor vehicle should not be charged in income statement. By mistake, it is charged. So profit will come down. First effect. Second effect, the motor vehicle is not taken in the non-current assets section. So that's why non-current assets will be lower value than what actually it is. That is the effect. Then finally, the effect of wrong treatment of revenue expenditure as capital or revenue will not show the true and fair view. The financial statements will not show the true and fair view of the financial results of the organization, financial transactions of the organization. That is the impact. So all these things I have explained here. Next question, ninth question. So complete the table indicating with a tick whether each item is a capital expenditure or revenue expenditure. Here few items are given, 1, 2, 3, 4, 5. Each item you have to decide whether it is a capital expenditure or revenue expenditure. This decision you can take only on the basis of theory which I have explained in the first video. So that's why again I am saying, without watching, understanding the first video, theory video, you cannot be able to attempt this type of problems. Now, delivery cost of new motor vehicle. Motor vehicle purchased and delivery cost paid. It is only a one-time cost. It's a capital expenditure. So delivery cost of new motor vehicle, capital expenditure. Now, motor vehicle insurance. Insurance will not be taken once. It will be taken time to time. So it will be a revenue expenditure. Insurance is a revenue expenditure. Installation cost of new machinery, only one time. At the time of installation of the machinery, only once installation charges will be paid. It's a capital expenditure, installation cost. Legal cost on purchase of business premises. So when we purchase a business premises, some legal costs have to be incurred, like registration charges. So these registration charges will be incurred only once at the time of purchasing the premises. It's a capital expenditure. So legal cost is a capital. Bank interest on loan to purchase the business premises. To purchase the business premises, bank loan is taken. On that bank loan, interest is paid. So interest is not paid once. Again and again interest is paid. So it will be treated as a revenue expenditure. Interest is a revenue expenditure. That's it. Next, 10th problem. Complete the table using a tick to indicate how each item would be classified when a new motor vehicle is purchased. New motor vehicle is purchased, how you treat the expenses. 1, 2, 3, 4, 5. 5 expenses are given. Vehicle cost. The cost of the vehicle, it's a capital expenditure. Only once you are paying the cost. So vehicle cost is a capital. Delivery cost, only once. At the time of taking the delivery of motor vehicle, delivery cost will be paid. So capital. Insurance, it is again and again paid. Every year insurance will be paid. It is a revenue expenditure. Insurance is a revenue expenditure. Additional shelving. Additional shelving means in motor vehicles some additional improvements are made. So this will be made only once. So that's why it should be treated as capital expenditure. Additional shelving is a capital. Fuel. Time to time, again and again, we have to put the fuel. So fuel used is a revenue expenditure because every now and then we have to put the fuel. So revenue expenditure. That's it. So 9th, 10th we have completed. 11th problem. Complete the table by indicating with a tick which transaction are revenue expenditure and which are capital expenditure. Just like the previous problem. Again 4 items are given. Now factory roof repairs. Repairing is a revenue expenditure because every now and then repairing is required on the premises, on the furniture, on the machinery equipment. So repair charges are always revenue expenditure. So here I am putting it revenue expenditure repairs. Now factory extension, it's a capital expenditure because meaning of capital expenditure is purchasing or acquiring a non-current asset or making improvement or making additions to the existing non-current asset. So when you make addition to the existing non-current asset, that is also a capital expenditure. So here factory extension is a capital expenditure. Machinery installation, just now I told you, installation will be done only once, capital expenditure. Then last one, machinery maintenance. Maintenance cost is a recurring cost. Again and again expenditure is required for maintenance. It's a revenue expenditure. That's all. Now come to 12th problem. Again 12th problem is a theoretical problem where explanation is required. Evaluate why it is important for a business to distinguish between capital and revenue expenditure. Why it is important? It is very important to distinguish capital expenditure and revenue expenditure because without distinguishing that, we cannot be able to ascertain the true profit. We cannot be able to get the true financial position from the statement of financial position. So if you want the correct profit, if you want to make the correct financial position, then distinction between capital and revenue expenditure is must. So here it is asking why. So it is important. It is important to distinguish between revenue expenditure and capital expenditure because examples are given. The incorrect treatment of revenue expenditure would result in profit for the year being either overstated or understated, as the revenue expenditure is written off against the profit in the year in which it is incurred. So, if you wrongly treat the capital expenditure as revenue or revenue as capital, the first effect would be the profit will be either overstated or the profit will be understated. Profit will be understated. Example, suppose if machinery is purchased, if a vehicle is purchased, wrongly it is taken as a revenue expense, then what will happen? The profit will come down. The profit will come down. Similarly, if expenses are there, but wrongly it is treated as a capital expenditure, then profit will be overstated. So first effect, it is very much necessary to distinguish because otherwise the profit will be understated or overstated. Next one, second one, the incorrect treatment of capital expenditure would result in non-current assets being either overstated or understated. The second effect is, if you make a mistake, not only profit, but also the non-current asset section. The non-current asset section of statement of financial position will also be either overstated or it may be understated. Then last one, by treating revenue expenditure incorrectly, this would result in financial statement not providing a true and fair view of the business. Finally, the final effect is, if a mistake is done in treating capital expenditure as revenue or revenue expenditure as capital expenditure, then the financial statements will not show the true and fair view of the business operations, of the financial results. That is the effect. Next question, 13th one. Complete the following table clearly stating whether the transaction represents capital expenditure, revenue expenditure, or neither. So 3 columns are given. Capital expenditure, revenue expenditure, or neither. So each of the item you have to decide whether it is capital expenditure or revenue expenditure or neither of the two. First, purchase of vehicle for resale. If only purchase of vehicle is given, it is only once expenditure, it's a capital expenditure. But here it is given purchase of vehicle for resale. The vehicle are goods. Vehicle are goods because I am the businessman. I am buying the vehicle and selling the vehicle. So from my point of view, these vehicles are not assets. The vehicles are goods. When goods are purchased, it's a revenue expenditure. So purchase of vehicle for resale is a revenue expenditure. If in the problem for resale is not given, only purchase of vehicle is given, then I would have written as a capital expenditure. For resale, it's a revenue expenditure. Next, repairs to workshop roof. Just now I told you, any repairing done to the premises, to the machinery, to the furniture, it's a revenue expenditure. So repairs are revenue expenditure. Then payment of staff wages. Wages are recurring expenditure. Every month wages are paid. So wages is a revenue expenditure. Wages, revenue expenditure. Additional capital invested by the owner. When the owner invested additional capital, it is capital receipt. When the owner invested additional capital in the business, it's a capital receipt. It is neither capital expenditure nor revenue expenditure. It is not an expenditure at all. It is the money received by the business from the owner. So additional amount invested by the owner is a capital receipt. It is neither capital expenditure nor revenue expenditure. So neither. Last one, purchase of new workshop life. So purchasing a new workshop life is a capital expenditure because only once we are incurring the expenditure. So capital expenditure. That's it. Over. Next problem is 14th. The 14th problem is on 1st April 2017, Jones purchased a new packing machine for use in the business. The following table shows the cost associated with this purchase. Complete the following table to indicate with a tick whether the transactions are capital expenditure or revenue expenditure. Again, by putting a tick, we have to decide whether it is a capital or revenue. 1, 2, 3, 4, 5, 6. 6 costs are given relating to the machine. Insurance, already I told you in so many problems, insurance is a recurring expenditure. So it is a revenue expenditure. So insurance is a revenue expenditure. Second come delivery charge. Delivery charge will be incurred only once at the time of taking the delivery. So it's a capital expenditure. So delivery charge, capital expenditure. Import duty. When we purchase the machine, some import duty will be paid. Actually, import duty are the taxes. When we purchase the goods from other country, import duty will be paid by the government. The government will impose import duty only once at the time of importing the goods. So import duty is a non-recurring expenditure, only once. So capital expenditure. Import duty is a capital expenditure. Now maintenance contract, again maintenance expenditure is a recurring expenditure. It's a revenue expenditure. So maintenance contract is a revenue expenditure. Then operating training cost. The training cost will be incurred only once. Only once training should be given to the employees. So it's a capital expenditure. Operating training cost is a capital expenditure. Last one, installation. The installation of the machinery will be done only once. So it's a capital expenditure. Installation is a capital expenditure. That's it. Over. So I have completed 14th. 8th to 14th problem I have done in this video. The remaining problems I will complete in the next video, inshallah.